Hello, I'm Ron Wilson and welcome back to PD Sessions. In its recently released Research Quarterly report, ANZ outlined the vital questions that need to be asked regarding Australia's economy. Meanwhile, the nation's housing sector enjoyed another strong selling season. In international news, optimism is rising within businesses across Asia, but in the US there's been an increase in mass job layoffs. In other news, the federal government claims new legislation will cut red tape for insurers, and ASIC has placed training standards under review for those providing financial product advice. Trevor Trahan has the details.
Some timely questions regarding Australia's future economic outlook are contained in ANZ's latest Research Quarterly. The report, ANZ Research Quarterly, Economies, Commodities and Markets Q2, found there are currently 5 big questions to consider when assessing Australia's economy and financial markets. The 5 big questions are: will there be sufficient strengthening in the non-mining sectors of the economy to offset the impact of weaker mining investment over the next 12 to 24 months? Related to the first question, will strong contributions to growth from net exports but weak demand growth generate sufficient employment growth to prevent the unemployment rate from continuing to increase? What is or are the most appropriate adjustments that could facilitate a smooth transition to stronger non-mining growth, and what are the prospects of these adjustments occurring? Will the Australian and US economies remain on divergent paths as they have done over recent years, though this time in reverse, as the US economy strengthens and Australia tends to underperform due to headwinds from mining? And will this divergence be limited to the economy or also extend to Australian markets? What does the latest global economic experiment, namely Japan's reflation, mean for the Japanese, Chinese and other Asian economies, and in turn for Australia? A strong autumn selling season for Australia's capital city housing market is being fuelled by the stimulus effect of historically low mortgage rates, despite June's hold on interest rates. The major cities of Sydney and Melbourne performed particularly well, according to the Australian Property Monitor's Capital City Market Report for June 2013. The report concluded that although Australia's economic performance remains under watch, buyer activity in most housing markets continues to grow. At the start of July, the RBA decided to leave the cash rate unchanged at 2.75%. The decision was made against the backdrop of Australian and global growth running slightly below average this year, with reasonable prospects of a pickup next year. In international news, Asian businesses are feeling buoyant about the future of the region, reflected in an Asian Business Sentiment Index climbing 6 points to 71 in June, its highest level in 5 quarters and the 3rd consecutive quarterly rise. Of the 91 companies that participated in the poll, 43.9% were positive about their outlook, while 53.8% were neutral. Only 2.2% reported a negative outlook. Mass layoff actions in the US increased in May. There were 1,301 separate actions by employers involving more than 127,000 workers, as measured by new filings for unemployment insurance benefits during the month, according to the US Bureau of Labor Statistics. Each mass layoff involved at least 50 workers from a single employer. The number of mass layoff actions increased by 102 from April, and the number of associated initial claims for unemployment insurance increased by 10,972. The troubled Eurozone had some positive news when relevant data for May showed a slight downturn in business activity since March last year. The market Eurozone PMI Composite Output Index rose from 47.7 in May to 48.9 in June. The Insurance Contracts Amendment Act 2013 received royal assent on 28 June 2013, and the government has claimed the legislation will reduce complexity and provide certainty for insurers and consumers alike. The new reforms will remove impediments to the use of electronic communication for statutory notices and documents, give increased powers to ASIC to take action to address breaches of the duty of utmost good faith by insurers, including claims handling matters, make the duty of disclosure easier for consumers to understand and comply with, especially when renewing household or domestic insurance contracts. In regulatory news, ASIC is mooting enhancements to the training standards for those providing financial product advice, with the release of Consultation Paper 212, Licensing, Training of financial product advisors. CP 212 proposes increases in the generic knowledge requirements, specialist knowledge requirements for financial planning, securities and superannuation, skill requirements for personal advice, educational level requirements. ASIC has revised its guidance contained in Regulatory Guide 148, platforms that are managed investment schemes, accompanied by new class orders, requiring investment platform operators to explain how they choose particular products on offer to investors through their platforms. As of 1 July, the revised requirements apply to new AFS licensees that are licensed to operate a platform from that date. Existing operators have until 1 July 2014 to comply with the requirements. APRA has released a response paper on the Financial Claims Scheme, or FCS, for locally incorporated authorised deposit-taking institutions, or ADIs, as well as the final version of Prudential Standard APS 910 Financial Claims Scheme, also known as APS 910. Under APS 910, ADIs are required to be operationally ready to meet payment, reporting and communications requirements should they be declared under the FCS.